Hello, 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 everybody. Welcome back. Today is Thursday, October 10, 2024. This is the All-Star Options Jam session. I hope you're doing well. For those of you fans of the show or viewers of the show in Florida, I hope, well, you're probably not watching this today. You probably don't have power, but maybe you'll see it later. Anyway, hope you guys are doing well. I know we do have a lot of customers, lots of friends, lots of family in Florida. So I hope you guys are all doing well. So this is the All-Star Options Jam session for those of you first time here. What we do here is we take a look at some action amongst open trades that we have in All-Star Options. Any exits we may have had. Now you get to enjoy my screen freeze. So that's great. I'll be back in a second, I'm sure. We're going to review any exits, any adjustments to open positions. We're going to update some stops that need to be updated. And we'll review some new trades that we put on in the last couple of days. But let's before we do all that, let's drop the old disclaimer, of course, that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. All right, so let's start here high level. Let's start at the S&P 500. This is the SPY, the ETF that tracks the S&P 500. Yesterday, we had a new closing high and what appears to be a fresh breakout. We're kind of back in the middle of the range of yesterday's range right now. Today, intraday, a lot of time left in the day. We'll see what happens. But yesterday, S&P closed at a new all-time high. QQQ, the NASDAQ is finally starting to wake up. It's still got some work to do to get back to the previous highs from earlier this summer, but it's showing signs that it wants to do it. But curiously, we've been talking about this a lot, internally and as well as on the morning show. The volatility index VIX still hanging above 20, which may not be as rare as you think, but it is certainly interesting to see the VIX above 20 with the S&P making new all-time highs. Now there's a lot of reasons why that could be. Number one, earnings season really kicks off in earnest tomorrow with the big banks starting to report tomorrow. Earnings season is always a volatile period, especially earnings season at the end of the year in October. October has traditionally been a very slippery month for stocks. And market participants have a long memory, of course, and they remember lots of October crashes. Now, I'm certainly not saying there's a crash coming, not at all, but you know, it does happen in these months. So you got that. We got all the nonsense with what's going on in the Middle East and with wars. That's no good. We talked about the hurricane, the hurricane damages, the twin hurricane damages in the Carolinas and in Florida. So there's a lot of things that are weighing on market participants, which is why I think the VIX is hovering above 20, even with the S&P making all-time highs. Something to pay attention to. I'm not. I don't have any grand call to make based on this information, but it's just something to be aware of, something that I'm certainly aware of and paying attention to. I would like to see VIX kind of cool off here, but we'll see what the market has in store for us. Let's go into recently closed positions since we last spoke. I don't believe we covered Zim last week. This is a trade that we got into as a calendar spread. We bought it right here on this like pullback. I think popped out, looked like it was having a great breakout. We thought we were getting lucky, getting cute, buying a pullback the next day on October 1st. We got into a November, April call calendar spread at the 30 strike. And by the way, I'm glad we did that because as you can see, the rug got pulled out of this trade very quickly. Our stop was 20. It gapped through there. And thankfully, we had those November 30 calls that we were short. That took a lot of the sting out of this trade. So we paid $1.25 for it. We got out for 56 cents. Basically, that was the premium that was still left in those April 30 calls that we were long. The November 30 calls were basically nothing. I think we covered them for pennies. But all in, it was a 56-cent credit to get out. So, hey, dead wrong in this trade. We were dead wrong. But the good news is we did it in a spread. We had short options. It's the cushion the blow. It happened quickly, so that minimized the losses. And so with trades like this and with many trades like this that have defined risk, I was fully comfortable. I sized my position fully comfortable and fully aware that I could potentially lose 100% of my premium. I could lose all $1.25. The fact that I got out at 56 cents means I lost, a little bit more than half, which I'm not calling that a win. It's not a win, but it's better than a full loss. That's the way I look at it. So it's a win in that way. So we're out of Zim. Next up, AMRK. AMRK. We closed this one this morning. This was a trade we got into. Man, we were looking like geniuses. September 11th. This candle here, this stock. We were coming into the day. We were thinking we wanted to put a trade on here. The stock traded low. I mean, I think if I remember correctly, intraday, if right off the open, it opened at I don't know 43.50. It quickly traded down to 42. It started bouncing a little bit right in the middle of this bounce. Probably around 42.50 is when we got in. And boy, we were looking like geniuses. Like we just caught that little, silly pullback. And the thing ripped higher for 3 days. And boy, feeling like geniuses. Let me zoom in here. Gene wanted me to zoom in on these charts a little better. So we'll do this here for you. Got in here looking like geniuses, but then boom, the market had other ideas, quickly retraced all the gains, and then it's following through to the downside today. We closed below our risk management level at 41 yesterday. So I closed it today. Shortly after the open, I got out for $1.75. Same story as Zim. I was prepared to lose 100% of my premium in this trade. I got out for $1.75, less than half. I lost less than half of my premium. So all in, not a terrible outcome. All right, let's go to the updated stops. We have a bunch of stops we want to update here. In no particular order. We'll kind of zoom out again. No particular order here. These are positions we're in, and most of them are going our way. And now we have some better stop levels. We want to keep trailing our stops. We don't want to trail them too tight. We want to give these positions room to work, but proper risk management is rule number one. We certainly want to get out when the charts tell us definitively that at least the short-term trend is reversed. So first up, Coupang, ticker CPNG. We're along the February 25 calls we got in back in mid-August. It's going our way. It's not blowing the doors off anything right now, but it's going our way, especially following this gap to start this week. It's holding that gap, which is great. We're moving our stop now to 23.50, which corresponds with the low early last week. That feels like a pretty definitive low, especially with the rising 50-period moving average coming up right about to that level. We don't want to see 23.50 get lost. If we see any closing price below 23.50, that's my signal to exit Coupang. Next up, IoT, Samsara Inc. We are along January 60 calls. We're having a great day today. I'm very encouraged by today's trading action. We're currently at all-time highs, or at least I believe those are all-time highs. Let's zoom out here real quick. Yeah, those are all-time highs. Great. I love me some all-time highs. So if we close here, that'll be a new closing high. That's a good sign for our position. We're moving our stop up to 44, which roughly corresponds with the low of this range here. It was pretty sloppy here in these days following this gap. I believe this was an earnings gap. A little sloppy, but 44 is just a slightly above previous resistance. And again, rising 50-period moving average is going to be there soon. So 44 is the level for now that we don't want to see IoT close below. Next up, Sherwin-Williams, ticker SHW. We got into this late August. We're long the December 400 calls. The stock is, it's testing us. It's testing us. We had a big pullback that found a bottom this week. I'm encouraged by this bottom. It bottomed kind of where it needed to, right? It came into this area of previous resistance. It bounced off the 50-period moving average. It's doing what I would like it to do. Here, a little zoom in better. So we're putting our stop there at 364. I feel like this low on Monday is a significant low, and I don't want to see Sherwin-Williams get back below that level. So 364 is our exit in Sherwin-Williams. Next up, ExxonMobil. This is a trade that we got into actually recently. When did we get into this trade? I think we got into this trade on Friday, and we're already moving our stop up. How about that? I think we initially put this trade on with a stop at 115. I'm putting my stop up at 117 for now. This is a trade we got into Friday, so I don't have the details on here for you. Let me just confirm that is the case. Yeah, that's a recent trade. Okay. ExxonMobil 117. We'll kind of glance over that one for now. Uber, this is the last update or last stop we're updating. We are long a October, March 80 call calendar spread. That means we're short the October 80 calls and long the March 80 calls. We paid 550 for it back on September 20th, September 19th. And kind of as we expected, it's been a bit of a rocky ride. In fact, that's why we put the call calendar spread on, because it felt like I wanted to own the March 80 calls. That's the position I wanted, right? But I thought that we'd have a little trouble getting through this 80 level, at least in the short term. Okay. Just in the short term for, over the next couple of months or next, six weeks, let's say. So I wanted to sell those October 80 calls to help, lower my costs. There was some nice premium there. I wanted to lower my cost of participation in the March 80 calls. So instead of paying, I don't know, it was like 750 for those calls, I was able to sell the October 80 calls, lowering my net cost down to 550. Now, as you can see, Uber is coming back on up and we're running out of time. The clock is ticking. Expiration is next week, next Friday. And ideally, I'd like to see Uber not quite get to 80 by then. I'm hoping the short calls will expire worthless. I've got a resting limit order out there, by the way, to buy these calls to close them at 5 cents. I have it set good till cancel. I haven't gotten hit yet, but I would like to get hit. I would like those to be covered and gone so that I have unfettered, limitless potential on the outside with my long March 80 calls. But for now, we have the spread on. And if we do get to 80, everybody, if we do get to 80 before next Friday, before options expiration, meaning I still have the entire spread on, then it's a first class problem to have. But I'm going to close the entire position at that point. I'm just going to close it. It'll be a profit. It'll be a nice profit because it's happening close to expiration. Not the profit I was hoping for, but we might make 2, 3, $4 on the trade. Pretty good outcome, all things considered. But keep an eye on this Uber. We're hoping that these short calls will expire away worthless and then nothing but upside from here. All right. That's it for the updated stops. Now, finally, I'm going to talk about recently added trades, new trades here since we last spoke last week. We already talked about ExxonMobil. Now, for those of you new here, I don't put the trade details on here. If you want the trade details, you can head to allstaroptions.com and head to the members section, head to the options section. You can get all the trade details there. We put detailed trading plans for every trade that we put on, the setup and why we like it, the option strategy we're using, how we're managing risk, where we may stop out, where we may take profits. All that information is laid out upfront day one so that you have what you need to manage that position going forward. But I'll just let you guys know on a cursory level, ExxonMobil, we got bullish. It's they got the rug pulled out of us from on day one, but it's coming back. And, this is a position we got some time for it to work out. But we are bullish in Exxon. Next up, PayPal. Similar story. Excuse me. We are leveraging the potential for PayPal to really rocket higher with an earnings report coming out on October 30th. I see my notes down here. So I'm going to hold this position that I put on through earnings. That's my plan. I am planning to hold this trade through earnings. My risk is defined. Again, all the details in the blog, but we are bullish PayPal. Next up, Toast. Bullish here. You noticing a theme, everybody? We've been putting on a lot of bullish trades. Makes sense, right? I mean, the S&P printed a new all-time high yesterday. We want to be buying stocks and getting long in this environment. And so Toast is another one of those. This is, I don't know if this is an all-time high, but we like the setup here. We think this has room to run. We're long Toast. And finally, Zillow. We are buying the dip on Zillow. This level here that we are currently at, and it goes back, several months. This is some significant former resistance that is now support. We're making the bet that this little run here, while this is a meaningful pullback, we think this is a little bit of an overreaction. My technical analysts love this setup. They love buying stocks like this. There's a lot of charts like this right now where stocks are kind of coming back to previous cycle highs and finding support and then rocketing higher. This is one of those trades we think can do that. We are bullish on Zillow. Get all those details on the blog. All right, everybody. Just for everybody who likes to have these are the updated stops. Fine. Oh, wait, did I not talk about that? I didn't talk about oh, I did. I talked about Uber stop. Never mind. So these are the updated stops. Take a screenshot if you need them. There they are. Just as review. And lastly, if you have any questions about anything I've discussed here or anything at all about All Star Options, shoot me an email, info@allstarcharts.com. It'll get routed to me. Um, if you want to get involved in All Star Options, if you're not involved yet, what are you waiting for? We got a chat room. Everybody hangs out. We share ideas. We commiserate when things aren't working. We celebrate when things are winning. It's a good community getting better every day. Join us at All Star Options. Here's the link right here. I also put the link in the chat. So you can find it in there. Also, if you like the charts that I use here, check out trendspider.com. My friends over at TrendSpider hooked you guys up with a promo code if you want to try them out. They offer 50% off subscriptions if you use my promo code here, Sean50. So trendspider.com to find that deal. All right, everybody. That's all I got for you. For all you in the Southeast, hang in there. We're thinking about you. We're hoping everything it turns out okay. Be well. You got a lot of cleanup up ahead of you. For the rest of you, enjoy your weekend. We'll be back next week, full throttle. It's a bull market, baby. Let's go. See you next week.